Okay, so as we all know, US has imposed tariffs on different countries here. Now, China is one of the country which has retaliated the most. Okay, so let's try to understand this entire situation with the help of ChatGPT. Okay, because this situation between China and USA, this tariff war has escalated a lot. Okay, so let's try to use ChatGPT to understand this entire thing here. Okay, so please explain the tariff war between USA and China, which is happening, which is happening since the day Trump announced tariffs on different countries. Okay, so that is my first prompt here. Let's run this one. So okay, so it is has given me two responses and it is asking me which one to select. So before moving to the topic, you can give a feedback here for the chat GPT if something like this happens with you as well. In the response number one, it is telling me what is happening, the reasons. It is asking me, it is giving me in the form of questions that what sparked the trade war, then background on in response to timeline of major events, how it escalated. So basically same information, but in the format it is giving. Okay, key phases are given here, key issues behind the trade war given here. Okay, and impact of the trade war, current status. So both of them are good, but I think I prefer the response number one more better. Okay, so I prefer this response. So this is the response here. Now let's try to understand this, that what is actually happening. Okay, so here you can see here the US China trade war, often referred to as the tariff war, began during the presidency of Donald Trump and has continued to have global economic implications. Here is a clean and structured explanation. Okay, so first of all, what sparked this trade war? Okay, so actually this was from March 2018. Okay, when President Donald Trump has his first term, and he announced tariffs on a range of imports, initially targeting several countries, but especially China. Okay, citing unfair trade practices, massive trade deficits, intellectual property IP theft, forced technology transfer. Okay, now he invoked section 301 of the Trade Act of 1974, allowing the US to take action against foreign practices that are deemed unfair. Okay, so that is here. Now it has given me the timeline of major events here, that how it is happening. So starting from 2018 in March, so US imposes global steel 25% tariffs and aluminum 10% tariffs. Then July, US imposed 25% tariffs on $34 billion worth of Chinese goods. Also, China retaliated with the same value. Then in August and September of 2018, more rounds of tariffs, eventually covering $250 billion in Chinese goods by end of 2018. Okay, so this is what happened in 2018 here. Then 2019, tariff hikes continues. The trade war intensifies, disrupting market and global supply chain. China target US agriculture, especially soybeans, hurting American farmers. US accuses Hawaii of espionage, banning its technology. Okay, so that is here. Then in January 2020, phase 1 trade deal, both countries sign a partial agreement. China agrees to buy more US agriculture and manufactured goods, improve IP protections. That is what China agreed to. Okay, China agrees, and then US agrees to cut some tariffs, but many stays in place. Okay, then comes the Biden administration. In 2021, Joe Biden keeps most tariffs in place, focuses shift more towards strategic competition with China, especially in technology. Okay, US launches new export controls on advanced tech like semiconductors. Trade tensions remains high through rhetoric is more diplomatic. Okay, that is here. Now what were the key issues behind this trade war here? What were the reasons? Okay, so if you try to see the issues here, then US says that there is trade imbalances. Okay, now if you try to see from the US position, then the US is saying too much Chinese imports and too little exports. So US was saying that we are importing a lot from China, but China is not importing a lot from us. They are not, US is not exporting a lot to China. Okay, then what was China's response? China responded to by promising to buy more US goods here. Okay. Also, there was IP theft and tech transfer. US firms pressure to share tech. Okay. And on the other hand, China responses, it denies systematic IP violations. Okay. Subsidies and state capitalism. US argues unfair advantages for Chinese firms. Okay. And China defended models as necessary for development. Okay, Hawaii and national security, risk of espionage, and on the other hand, China accuses US of trying to suppress its growth. That is here. Okay, now then we have impact of the trade war. So global supply chain disrupted. Okay, now higher prices on goods for American consumers and businesses. Okay, because there is a lot of tariff on imports of by US. Okay, because now US is imposing tariffs on what it is importing. Okay, so who needs to pay the price for that? So consumer need to pay the price. American consumer need to pay the price. So that is why higher prices for American goods, American consumers, and American businesses. Okay, now it also hurt US farmers as well, because on the other hand, China is now imposing its own tariffs on the agriculture products it imports from USA. Okay, US exports agriculture products to China, and because now China has tariffs on it, so it is hurting US farmers. And Chinese economy faced pressure but adapted by looking inwards and diversifying partners. Okay, global market experienced volatility. That is here. Now what is the current status as of 2025? Tariffs largely remain. Tech and national security are now the main front of US-China economic tensions. Both countries are decoupling in certain sectors, especially high-tech industries. And global institutions like WTO are increasingly sidelined in favor of bilateral or regional negotiations. Okay, so that is what it has given me up until now. Okay, now it is giving me some advice that if you want to know a timeline chart or a summary of bullet points, a visual infographic, then you can do that as well. But what I'm going to do, I'm going to ask something more as well. Okay, so I'm going to ask what are the current tariffs imposed by both USA and China on each other? So what are the current tariffs? Okay, so it is searching the web here. So today is 10th April. So as of 10th April 2025, the USA and China have imposed significant tariffs on each other's imports, escalating their ongoing trade conflict. Below is an overview of the current tariff measures. Okay, so it is telling me that on 9th April 2025, yesterday, President Donald Trump announced an increase in tariffs on Chinese imports to 125%. Okay, citing China's retaliatory actions and ongoing trade imbalances. This hike applies broadly to Chinese goods entering the USA. Okay, now it is going in backward order. So we have April 12 as well. So what happened on April 12, April 5th here, February 1st as well, February uh, 1st as well. Okay, so these are the tariffs imposed by USA on Chinese imports. Okay, so on April 2nd, the US implemented a universal 10% tariff on imports from over 100 trading partners with higher rates for specific countries, including China. So for China, this resulted in an additional 34% tariff on top of existing duties, leading to a cumulative tariff rate of approximately 54% on Chinese goods. Okay, so on April 2nd, there was 54% cumulative tariff on Chinese goods by the USA. Okay, now on the other hand, if we try to see from the Chinese perspective, then you will see that on 9th April, USA imposed 125% tariffs. Okay, and on 9th April, first of all, China retaliated on US tariffs. Okay, China imposed tariffs totaling 84% on all US imports. Additionally, China blacklisted 6 American firms and initiated regulatory actions against others. Okay, so after this one, we had this one, 125%. So the recent one is by the USA on China, which is 125%. Okay, so that is here as well. Okay, and on February 10, 2025, uh, also China implemented the tariffs here. So 15% tariffs on US coal and liquefied natural gas, 10% tariff on US crude oil, agricultural machinery, large engine vehicles, and this. Okay, these escalative tariff measures have intensified economic tensions between the US and China, impacting global market and trade dynamics. Okay, now we can go even further as well. So if this tariff war keep escalating, then how it will affect both countries? If the US-China tariff war continues to escalate, the consequences for both countries and the global economy could be severe. Here is a breakdown of the potential effects. So US impact, impact on the United States. Okay, so higher prices for consumers. Tariffs are essentially taxes on imports. Okay, and US businesses usually pass those costs on to consumers. Okay, so everyday goods like electronics, clothing, furniture, and even groceries may become more expensive. Pressure on US manufacturers. Okay, companies that rely on Chinese raw materials or components face higher cost, making production more expensive. This reduces profit margin and can lead to job cuts or businesses moving operation abroad. Farmers and exporters hit hard. Okay, China retaliates by imposing tariffs on US agricultural goods, hurting farmers, especially soya beans, pork, and corn. Even with government subsidies, long-term damage to export markets could be hard to reverse. Okay, so export markets at this time would be hard to reverse. Yeah. Okay, now innovation and tech industry setbacks. Tariffs on Chinese tech and electronics can disrupt the supply chain for US tech companies. Example, Apple, Tesla. Okay, R&D investment may slow down as companies try to absorb the cost burden. Inflation and economic slowdown. Escalating tariff feed into inflation, reduce consumer spending, and could drag the economy into a recession if prolonged. Now, what will be the impact on China? Slower economic growth. Okay, China's economy depends heavily on exports. See, we know that China exports a lot, especially to US, and losing access to the US market slows down its GDP growth. Manufacturing hubs like Shenzhen may see reduced demand, job losses, and even shutdowns. Supply chain reorientation. Okay, so Chinese firms face challenges as foreign companies move production to Vietnam, India, or Mexico to avoid tariff. Okay, this shift reduces China's role as the world's factory over time. Reduced access to key goods. Tariff and export restrictions from the US, especially in tech like semiconductor and AI chips, can limit China's development in advanced industries. China may struggle to meet its self-sufficiency goal. Diplomatic and economic isolation. Escalation pushes China towards creating alternative trade blocs like BRICS, but that takes time and cooperation. The US may strengthen ties with allies to further restrict China economically. Okay, so this can happen as well. Now, what are the global consequences? Supply chain fragmentation. Countries and companies may begin decoupling from both US and Chinese suppliers. Okay, that will happen. Stalled globalization, so international trade may become more regionalized. Okay, and market volatility. Stock markets and currencies react unpredictably to trade war headlines. Emerging market stress. Nations dependent on trade with US or China may get caught in the crossfire. So that is what can happen as well. Now here there is a summary given to me by ChatGPT that who will lose more. So if we talk about consumer cost, the people of America or the people of China, okay, so for whom it will be more damaging. Okay, so consumer cost will be high for US and it will be medium for China. Okay, so it will hurt more US consumers, US people. Okay, export dependency. Okay, so US will have lower export dependency. Okay, and China has more export dependency, so this time it will be more hurtful for China. So in terms of consumer goods, so if we talk about normal people, so it will be more helpful for American people. But if we talk about major businesses who export, so at that situation it will be more helpful for the China. Now tech innovation risk, it will be high for both of them. Okay, because both of them needs each other for material or technology. Supply chain vulnerability, so it will be, now if we talk about supply chain vulnerability, it will be moderate for US but it will be severe. Okay, it could be severe for China here. Okay, so it is more hurtful for China in terms of supply chain. Okay, now long term resilience. So in long term, so US is stronger in building the long term resilience, but China will take time to build long term resilience. So in terms of long term resilience, so long term resilience is also more favorable for US. Okay, so that is here, this is the summary here. Okay, this is the summary here, and from this summary you can understand that for now it will be more helpful for American people, more helpful for Chinese businesses, helpful for both in terms of tech. Okay, more helpful for China as for supply chain. Okay, and more helpful for China in terms of tech resilience. Okay, so both countries lose in the short term, but in the long run, the US may adapt faster due to a more consumer driven economy. See, US economy is more consumer driven. Okay, so they will adapt faster, while China faces a greater challenge transitioning from export led growth to self sustaining domestic demand and innovation. So this is the answer given to me for this one. Okay, so from this one we know this will be more helpful for China as a comparison to USA here, but in the short term it will be more helpful for American people. Okay, American normal people, it will be more helpful for them because it will create inflation for the products. Okay, so in the short term it is more helpful for USA, but in the long term it will be more helpful for China. Okay, that is here. Now as an Indian investor, as an investor who invests in Indian market, let's try to know how it will affect India. Okay, so how it will affect Indian market, Indian stock market. How it will affect Indian stock market in short term and in long term. Long term. Okay. So India's position in the US-China trade war is complex but offers both risk and opportunities. Let's break down the potential short-term and long-term impacts on the Indian stock market. Example Nifty and Sensex. Okay, so short-term impact on the Indian stock market. So global sentiment spillover, escalation of the trade war increases global risk aversion. Investors typically pull out of emerging markets like India during global uncertainty, leading to FII outflows. We are already seeing a lot of FII outflows from the last 6 to 7 months, but now it might happen more. Rupee, and because there will be a outflow of foreign investment, so rupee will depreciate even more, and there will be volatility in Sensex and Nifty. Commodity and currency stocks. Trade tensions can affect global prices of oil, metal, and currency. India, being a major oil importer, may face inflationary pressure of oil prices rise due to supply chain disruption. Short-term correction in specific sectors. So export-dependent sectors like IT, pharma, and textile may see short-term corrections due to global slowdown fears. Companies heavily reliant on Chinese components, example electronic and auto parts, may suffer from cost pressure. Okay, now what is the long-term impact on Indian stock market? So China is number one opportunity. Supply chain diversion. See, we know that China heavily rely on exports, and because it might not be able to export a lot to USA, so it will try to find other markets where it can export. So India is a very large market here for China. So global companies diversifying away from China might turn to India for manufacturing, assembly, or R&D. Even Chinese company might do this one as well. Okay, Chinese company might do this one as well because that from China they might not be able to export directly to India. So Chinese firms may establish factories in India to export to America. Okay, like that. Okay, so that might happen. We have read something like this in the above. Okay, so that is here. Now this benefits capital goods, industrial manufacturing, logistics, REITs, and infrastructures, mid-cap exporters. Now sectors to watch: auto ancillaries, chemicals, specialty manufacturing, electronics, real estate. Okay, that are the sectors to watch. Now tech and service sector gains. So we have this one here. As China faced tech restrictions, India's IT and tech services could attract more businesses, especially in cloud, AI outsourcing, and cybersecurity. Startup and mid-cap IT companies may benefit from outsourcing, rerouting. Foreign investment magnet, India may become a preferred destination for long-term foreign investment due to stable democracy, growing middle class, geopolitical neutrality, large young force. Okay, this can boost stock markets over time, especially in sectors like banking and finance, infrastructure, FMCG, green energy. Now, what are the long-term risks to watch? If the trade war drags down global growth, India's exports will still suffer. Okay, geopolitical pressure to choose sides could put India in a tight spot because see, India is a neighbor to China and want to maintain good relations with China, but it already has good relations with USA. Okay, and it has already trying to have a bilateral trade with USA. Okay, so all of that. Over dependence on foreign capital could cause volatility if sentiment swings. That is here. Now this is a summary table here. So impact area, how it will affect: short term effect, long term effect. Overall market sentiment volatile, bearish, but gradual bullish trend. So still there is a gradual bullish trend in long term. FII activity, outflow likely. So it is a high possibility that there will be outflow, but in long term there will be inflow. Okay, currency, it will still under pressure, but it will stabilize with growth. Manufacturing, limited benefits in short term, but big upsides make in India in long term. Okay, tech and services, resilient and growth acceleration in long term. So tech is a high, tech will resilient in short term and it will even accelerate in long term. Exports, so it will hit by global slowdown, the exports, but it will gain from China from plus one shift. Okay, so that is here. That is how India will be affected here. Okay, so this is the breakdown of what is recent happening in the US China trade war.